welcome, welcome.
Thank
so
you.
yeah,
Thanks.
very happy to have all of you today. So Alex, Key, Michael. So I think to give everyone in the audience kind of like an introduction to what you guys do, to give some context. So I'll let you guys start and introduce yourself briefly. Alex, you want to start first?
Yeah, my name is Alex Svanevik. I'm the CEO and one of 3 co-founders at Nansen. Nansen is a blockchain analytics platform that investors and traders use to find out what is really happening on the blockchain.
Hello, my name is Ki Youngju. CryptoQuant is the institutional-grade on-chain data provider. We are focusing on institutional-friendly, institutional-grade index to evaluate crypto assets. So we just announced our partnerships with CME Group. Our data is available on CME Data Mine. So yeah, happy to have been here. Yeah.
Hey, I'm Gronager. I'm the CEO and co-founder of Chainalysis. Chainalysis have been around for the last 8 years or so, and we are basically looking at the blockchain, looking at all the data that's out there, look at this as a treasure trove of data, actually. And on that, we build different products for investigations, work with a lot of governments. We build for compliance, work with basically every crypto exchange out there. And last but not least, we have a lot of data on business intelligence, like tracing NFTs, doing other things. So everything that happens on the blockchain is stuff that we care about.
All right, thanks for the intro. Alex, I see you have a pretty cute penguin on the stage, rocking it, Apache penguin. So yeah, I mean, you guys track on-chain data. Topic of the discussion today is what's really happening on the blockchain. I thought I'd give you guys an open question. Share with us an interesting insight that you guys know, that you guys have from the tools that you guys have built.
Yeah, happy to go first. So there's one anecdote that we were just talking about Miami backstage. I was meeting one of our customers there who had set up Nansen smart alerts. And in May, when the Luna or Terra USD depeg happened, they got an alert that a lot of people were pulling liquidity out of the curve pools with wrapped UST. And because they had that early warning with liquidity flowing out of curve, they also pulled their own liquidity out of those pools. And then, as we know, shortly after, UST depegged. So I think that's an example of how you can, if you actually follow what's happening on the blockchain, you can stay ahead of some of these large events. It's not only for increasing your portfolio, but it's also to defend your own portfolio when there are big market movements.
The problem with aggregated on-chain data is noise. So whenever exchange flows is skyrocketing, it doesn't mean anything, right? We need to figure out who sent those money, why they sent money, what's the purpose behind this transaction. So we have a bunch of other granular level metrics, like miner flows and UTXO bands. So if you track down over 7-year-old Bitcoins, whenever these old coins moves, it's highly likely from, I would say, criminals or people who used gambling websites, drug websites. So whenever we spotted that, whenever this illegal transaction happens, it went to some kind of mixer. So it's highly likely bad news for this market. So you might want to check out spent output H bands over 7 years on our website, and whenever this data spikes, it perfectly matches the top, which means like significant selling pressure. So yeah, it's pretty quiet lately, so just don't worry, we're good. So yeah.
Cool. Yeah, I think there's a lot of things you can find on the blockchain, and one of the things when you asked the question, I couldn't help start thinking, what is really cool? And I think one of the things that I found really hard to analyze over the last couple of years, and now we do a yearly report around it, that's what happens in crypto in the real world. So what countries are actually deep into crypto and what happens there? And we've been following that year over year. And for example, number one country is one of the neighbors to Singapore, it's Vietnam. And then that's been state number one for many years, basically. And then we have a runner-up that's number 2 as the Philippines. And they came from like being number 15 to number 2 last year. And it's still driven of like part of it is remittances, but a huge part of that has been basically pay to play, gaming. So gaming is happening, and you can see that on the blockchain. It's yet another example of interesting things you find there.
All right, sounds good. Like a lot of interesting insight, just too much data going along. Like hard part is like looking and finding right intel in there. Alex, you guys at Nansen, I guess you guys popularized the term smart money trader, kind of like trying to follow the smart money and maybe go for an attacking move to find like good position to have spot in, or like you mentioned, defensive move to kind of pull out like Luna, for example. Like, I'm just wondering, right? Like, how do you define smart money? Like, can I be a smart money, for example? How do I be a smart money? And does it still work to follow these smart money addresses? Like, I mean, at the start, like when nobody's following, yeah, I can see how it can be an alpha. But if everyone's kind of following it, does it still make sense to follow? Does it still work?
Yeah, so I think like Key mentioned earlier, there's a lot of noise on the blockchain, right? And when we started Nansen, we wanted to find a way to surface the signal in all of this noise. And so if you think about the blockchain, or the blockchains in plural now, you have maybe hundreds of millions of addresses. Of course, many entities have multiple addresses and so on. But what you really care about is a small subset of these addresses and what they're doing. So what we're trying to do with Nansen is to basically curate what are the addresses that you care about when it comes to investing and trading. And so there are kind of two high-level ways to think about smart money. One is just based on known entities. So if you think about large funds that you will know, Alameda, Pantera, A16Z, and so on, most people will consider them smart money because they spend a lot of time and resources into figuring out what's happening in the space, developing investment theses, and so on. The other way to think about it is from a behavioral perspective. So you asked, can you be smart money? And yeah, I actually have people that I know and friends and so on who have had the Nansen algorithms tag them as smart money. I haven't checked your wallet, maybe you can check it afterwards. But so definitely there is kind of one component which is social, and you know about who the entity actually is. And then there's a behavioral part. And of course, the behavioral part, you can decompose it into NFT flippers, you can look at yield farmers, you can look at who's good at trading certain tokens to generate very highly positive P&L. And it's really a combination of all those things. There's no silver bullet or one-line kind of magic formula, but it's really a combination of all these different signals that we group together. And we think this helps investors navigate the landscape and understand what the smart money is actually doing.
Makes sense, makes sense. So, I mean, talking about wallets, and also you have the algorithm where you kind of track the behavior, but you have to have a way of tagging all these wallets and like from known entities, and that's kind of a very long list, and entities change their addresses very frequently. I'm sure you have like hundreds of thousands or maybe millions of addresses tagged, and I'm sure it's the same for both of you. So I'm curious to hear from the three of you. How do you tag these entities? How you find these entities? How you dox all these guys? Because some of them go to some great lengths to kind of hide their trails. So yeah, maybe we start with Alex, and then we go down to Michael.
Yeah, as I said, there's no silver bullet, right? So you have to combine man and machine. You need to have research analysts that are actually monitoring what's happening. And it means, in some cases, reading about fundraising rounds and mapping the token distributions back to the lead investor and so on based on what you see happening on chain. But you have to have algorithms too. And more than 99.9% of all the 130 million plus addresses that we tag come from algorithms. So it's not feasible to manually just sit around and tag all these different entities and addresses. Yeah, so it's really a combination of those two things, man and machine, and there's no silver bullet. And I'm sure the guys here have some interesting ideas that we could borrow, perhaps, in the way we tag addresses as well.
My turn. So we are providing data to quantitative hedge funds and traditional finance, and these people, they don't like changing data. So our focus is building algorithm to figure out wallets. For example, for exchanges, we sent a small amount of money to exchange user deposit wallets and see where this money is going. So for crowdsourced label like Nansen, is amazing feature. So I think it's good for the community. So we are using testing algorithm and sometimes machine learning to figure out these wallets.
Yeah, I think it's the best analogy to how to do this is how do you run a machine learning algorithm? You need training data. So first of all, training data is in the human, as Alex said. Like you basically train the algorithm yourself. There are certain things you can do. It's obvious. You can find the pattern, and then you can reuse that algorithm in many ways. But then when you want to do it at scale and look at billions of transactions over many, many years, the only thing that really works is to have access to ground truth data. And our like secret sauce, to many ways, is like basically the huge network of customers we have. So like any transactions that being sent is being vetted for compliance reasons, and it means that we also get like a very good insight into what does a big service look like? What is a big wallet? How does that look like? And every time they send and interact with someone that's not a big wallet, they're interacting with a personal wallet. And what does a personal wallet look like? And how do they move cross-chain and so on? That's again data you can infer from that. And then like there's of course all the services out there that's regulated and transacting and so on. But then we have a team of, I don't know, 50 people or so that are transacting with anything that you should not transact with. That's like darknet markets, it could be terrorist cells, it could be other things. And they help like law enforcement partners to figure that out. So that builds like our data set of personal wallets, interest in like bad stuff on the blockchain, and then all the stuff that we know and love and like we all use in the blockchain for every day.
So Michael, I believe many of your clients at Chainalysis are law enforcement agencies, and you help a lot of governments, help with investigation once like things go completely wrong, for example. And one of the reasons the largest hacks that have happened is the Ronin hack. $650 million was stolen from the bridge, the Ronin bridge. So I'm curious to hear, like, can you share any insights from these incidents, and how much of the money that has been recovered so far, how much have you guys helped? I'm just curious to hear any updates from this Ronin hack.
Yeah, it's a great question. It's like, if you look at the Ronin hack, so basically, it's a bridge. You have this hot wallet sitting in an infrastructure that's supposed to be safe, as everything is. It wasn't. It got hacked by the Lazarus group from North Korea. Mm-hmm. And what happened after that is like different schemes to launder the funds. Right. And how do you launder funds? Well, the first thing you can do is being fast. If you move the funds out and you move them to an exchange and they're out and you have accounts that's been set up over many years and just waiting to be used for this purpose, then suddenly you have the funds out. That works. Then the next piece of this is like, well, some point people will figure that out and they're alerted. So now you move the funds through a mixer. In this example, Tornado Cash was like the main mixer being used here. And then that sets everyone that traces the funds back in time, and then you have another advantage. So what you need to do to be, first of all, figure out who did it, and secondly, being able to seize the funds, which is really what you want to do, is number one, you need to have the data to identify the funds, have the capabilities to trace through a mixer like Tornado Cash, which is like something we could do relatively trivially.
This, yeah.
And then the next part of it is doing it fast, really fast, because if you can do it fast, then you can actually get ahead of it and say, hey, exchange A, B, or C, these funds are actually someone else's money, and you should seize them, and then law enforcement can collaborate on that. And today, 10% of the funds have been recouped that way because of collaboration between the industry, between law enforcement, and Chainalysis investigating the case.
So you spoke about Tornado Cash. Recently, the US government kind of put it down, taken it down. But it's kind of a whack-and-mole game, right? Tornado Cash goes down. It's just a matter of time before the next one comes up. What do you think of the Tornado Cash sanction? Is that the right thing to do? Should government sanction smart contracts in the first place? And has anything changed on-chain since the Tornado Cash ban happened, the sanction happened?
Yeah, it's a good question, right? And again, I would say sanctions is like it's a big net. You throw it there, and it has, of course, an effect. And to start with the last question, yes, stuff has changed. There's hardly any funds moving through Tornado Cash anymore. Another thing that changed is there's copies of Tornado Cash out there. So you cut the head of a dragon, and it gets 3 new ones. So Was that really what you wanted to accomplish? That's the question. Maybe it has a little bit of help, but we all know that this was actually a method of laundering funds that was like getting better and better understood, and the tools to solve it was getting better and better. So it would probably have meant the ability to seize more funds by not doing it. But again, you want to show action, and it did work. Like Tornado Cash stop acting. And then to the first question you had was like, what do we think about? What is Tornado Cash about? Can government do this? And there's many like viewpoints on this. I would say the normal thing you would say, like, this is a service for privacy, but is it really? Because what is privacy actually? And the way I usually divide what privacy is that privacy is that your neighbor doesn't know what you're doing. And anonymity is that no one knows what you're doing. And we've used over hundreds of years banks, for example, and other institutions as our providers of privacy. So our neighbor didn't know what my salary is, but government could figure it out if they need to, or if the banks tell them that something is going on. So they kind of solved that. And Tornado Cash only solved one part of that equation. They solved like no one figures it out anymore. And that was one of the weak points in a mix or in that service. So I would say, is it right or wrong? I don't know.
Any of you want to add anything on Tornado Cash?
I mean, I think it's important to think about the ethical part of that, which is a subjective statement, and then you have to look at the facts, right?
Yep.
And it's true, like Michael said, I mean, there's less usage of Tornado Cash now.
Yep.
In fact, Tornado Cash was also used, I think, less than people realize. If you look at the total number of addresses that have used Tornado Cash, I think we're talking less than 25,000 addresses in total, right? So I think that's an important point. The ethical judgment on how highly you value privacy and how you view these different things, that's a subjective thing that people have different opinions about. But it's important to understand, of course, the technology, the behaviors around Tornado. And I think if you see people or criminals moving to other protocols instead, then it probably doesn't have the intended effect, right?
Yeah, I mean, that was one of my next questions, actually. I mean, we used to only live in a world where when you started Chainalysis, it was just Bitcoin, and then you just want to track and dox Bitcoin addresses, UTXO and all those things. Yeah. And then Ethereum came about, and they're like, okay, EVM-based, account-based, let's try to track address. Easier to track, a lot easier, probably, but you know, different check. And then in the last 1 year, we kind of moved from Ethereum EVM-based and the data, on-chain data on Ethereum, to a multi-chain world, right? So like, there's like 60 over different chains that we track at CoinGecko, on Gecko Terminal, for example. And I'm sure that all these generates, all these swaps on all these dexes, multi-chain bridges across all these different 60 dexes. It must be a massive headache for you guys, right? Like tracking all this data. So I'm curious to hear, like, how are you tracking the multi-chain? How many chains you do? Anything interesting on these chains as well? Yeah, I mean, pretty free for all question, I would say.
Yeah, so first of all, this is a good occasion for me to plug Nansen Portfolio, which is a portfolio tracker that spans, I think, 45 different blockchains. So it has very broad coverage to track your own funds in your own portfolio. For the Nansen Pro product, we track about 10 different blockchains. If you think about the most granular access of transactions and smart money movements and things like that. And yeah, it is a headache from an engineering perspective. It means you have way more data because these other chains, if you think of them compared to Bitcoin or Ethereum, they typically have much higher throughput, which means you have way more data. So I think we scan close to 1 petabyte of data across the different chains that we support every single day in terms of querying, load, and so on. But I think it's not going to reverse this trend towards multi-chain. And I personally used to think that Ethereum was going to kind of dominate everything, and it was the only ecosystem that would have genuine organic traction. I think what we're seeing now is different chains optimizing for different things, making different trade-offs, and they will find use cases for various different things that users want to do. I think one interesting thing to highlight, I was looking at the NFT data recently, and you see Magic Eden and Solana NFTs actually growing quite a lot in activity compared to the rest of the NFT market, which has been largely going down. So this is another thing that when you are tracking what's happening on the blockchain, if you only look at one ecosystem, you might miss a lot of activity in the other ecosystems. So I think all of us here have to monitor what's happening on multiple different blockchains. You can't limit yourself to just one ecosystem.
From institutional adoption point of view, I think for us, it was pretty important to just focus on Bitcoin and Ethereum. So we've been providing Bitcoin and Ethereum data, but institutions, they just overcame Bitcoin hurdle, and then they are looking for Ethereum data. And then, I guess, looking for other data stuff. So I think on-chain data providers, they are dividing into multiple layers. We're more like application layer. So for infrastructure layer, like the Graph and some of the raw blockchain data providers, we're using some of the third-party data providers for now. But once these institutions onboard those chains for quantitative trading and others, I think we will build some data infrastructure for them. Yep. So, yeah, things are changing right now. Yeah.
And I would say, like what you said, basically, it's a lot of data that you need to look at, and there's a lot of the trend is that the number of transactions is going up, and that's been growing and growing, and that will only grow even more than it is now. So I would say our position in Chainalysis has always been we need to track every single blockchain out there, because every single blockchain could potentially be important for a customer in one way or the other, and that will happen. I do think, though, that if you think about all technology and how it evolved, we have a rule of roughly a handful, right? So today I usually say there's 3 computers in the world. It's Azure, it's GCP, and it's AWS. So distribution is 3 computers. It's nothing more than that. That's the size. And then if you look at operating systems, it boiled down, number of phone platforms and so on. So you typically see a curve where there'll be a lot, and then there'll be consolidation. I think we will see that, but you cannot plan for that right now. Right now it's the other thing. And no matter what happens in terms of consolidation, all the features that us looking at data might hate about there's too many transactions, they will go into another blockchain then. So it's not going to stop. So it does make sense to invest in the capabilities to look at that and trace through it.
Yeah, I think I hold a view that anything that can be tokenized will be tokenized. So we have millions of tokens, yes. And when that happens, existing blockchain just don't have the capacity to track everything. So all these things that's happening on Web2 database, a lot of them will move to blockchains. We're powering the next sort of applications. We will see app-specific blockchains coming up, and then we'll see an exponential growth of blockchains, especially when EVM make it so easy to just copy-paste all these blockchains. So it's going to be a massive exponential growth in data, that a lot more work for all of us here on stage, I suppose. Yeah. I think one question that I want to ask, right? So it's one of the questions that one of my followers on Twitter asked, Tim Copeland from Decrypt asked, how does so we are in month 10 of the current bear cycle, the peak that was in November 2021. So we are kind of went through 10 months of down-only cycle, I suppose. How does current on-chain activity, in September, compare against the same period during the last bear cycle, say around mid-2018? Curious to hear your point of view on this. Mike, you want to go?
Yeah, I'm totally happy to go first on that one. So I think that, first of all, one thing that's a huge difference is there's way more addresses and transactions that are out there now than there were before, and way more use cases than there were before. So going back to 2018, that was small compared to now, far, far less. Less data, it was basically just Ethereum and Bitcoin, that was it. And now it's so much, much more, and there's so many more users that's involved in this. Another thing that's important is that I would say transaction volume has not really declined a lot. The value that's transacted, yeah, that's down because that's part of a bear market, right? But the number of transactions, that's roughly the same. So I don't really see a bear market.
At least non-bear market, yeah.
Just to chime in on that, so if you compare to 2018, one major difference, there are many different things to point out here, but we have stablecoins now, more than $100 billion of stablecoins, yes. And just the injection of US dollars into the crypto economy is very significant. And so if you think about ICOs that raised money in 2017, 18, most of them raised money in ETH that they had to sell off, the next 12, 18, 24 months. Now most of the raised capital is actually in US dollars. And as we know, looking at fiat currencies around the world, the US dollar is doing pretty well, right? So I think that's a major difference, and you can see it on chain with the stablecoins, more than $100 billion in circulation, mostly from custodial stablecoins like Tether, USDC, also Binance USD backed by Paxos, and of course algorithmic ones like DAI. So that's a huge difference. The other thing is, as Michael was saying, the transaction activity is there because you have use cases now. You didn't have that in 2018. You have NFTs, right? And transaction activity for NFTs is still very high, but it's spread across more marketplaces and more chains than it was 1 year ago.
Yep.
I think DeFi is maybe the area where you see less activity now. There's been a lot of these kind of liquidity games and incentives that, of course, 2 years ago led to DeFi summer. You see less of that now, but I think, so the debate for DeFi is more about how big is the TAM, right? Because DeFi makes a lot of sense, but it's unclear how big the TAM is if you compare it to other types of financial products and so on.
Yeah, I mean, if you just take a look around this conference, like compare this against the previous conferences that we were around in 2018, like, I mean, this is a massive conference. We are month 10 of a bear market. There's 7,000 of you guys here attending, paying $500, $1,000 per ticket. So kudos on you guys. What bear market, right?
Yeah.
And also, I think it's worth mentioning, like, there's a lot more things to do on in crypto these days. Previously, it was just Bitcoin, Ethereum. Smart contract wasn't really a thing. Trading on decentralized exchanges wasn't a thing. NFTs wasn't a thing. So many more DeFi applications in here. I think NFT was kind of a game changer in my opinion. Previously, it was a very male-dominated world, but we don't really, very finance as well, very nerd, very CS guys. We get a lot of creatives, a lot more female participation these days. So yeah, I think it's interesting. A lot more use cases for sure. 8 minutes more on the time. So curious. Let's talk about NFTs. Big fan of NFT. Any interesting insights on NFTs the last 6 months? And you kind of mentioned here and there.
So we have a section on Nansen called NFT Trends and Indexes, which is actually free and open to use for anyone. And what you see there, like I was mentioning earlier, generally NFT activity, or rather NFT volume in US dollar terms, is down quite a bit. I think most people are aware of this. But you do have some portions of the NFT market that are doing better than others. You see blue chips holding up better. You see art NFTs holding up better, whereas things like gaming NFTs are generally down pretty bad, probably because there was a lot of hype and speculation surrounding it, and there were, frankly, quite a lot of supply, like a lot of different projects. Yeah. And the thing people realize is that it's very hard to build games. And so it takes a long time to actually produce what they are promising in their pitch decks and so on. So generally you see more of a downtrend on the game NFTs. I mentioned earlier that you do see activity on Solana going up quite a bit. It used to be only Ethereum and OpenSea. Now it's a bit more diverse, which I think generally is healthy for the space. But so it's a bit of a mixed picture. I don't think the headline of NFTs are dead or anything like that is very accurate. You have to look at the actual sub-sectors within the NFT space.
And I think it's interesting, like at the moment, almost everything is correlated with Bitcoin. Like Ethereum is correlated with Bitcoin. I think when blockchains start decoupling from each other, that's when we start seeing more interesting things. So like we're starting to see early signs of Solana's activity decoupling from Ethereum. Looking forward to seeing what the Aptos and Sui guys are doing. There will be a pretty interesting new L1 coming up. Will they be the Solana killers, for example, and then decouple from the activity there? Will there be a new use case that is kind of very specific to these chains, and that we start seeing a lot of different things? So I think all these things are very interesting, and will be very interesting to monitor what's happening on all these chains. So I guess for three of you, right, I'm really curious to hear, there's so much data. What are the 3 top metrics that you kind of enjoy tracking maybe on a day-to-day or a week-to-week basis? Like, what are 3 things? There's so much data to look at. So, Mike.
Yeah, I think this is, again, there are many things you can look at the blockchain, many pieces of data there. I think one of my, and this is kind of the trend in the blockchain that's been concerning for many years, is like, is there criminal activity going on in the blockchain? What's going on there? And for us, like one of the metrics that we track year over year and is being quoted like basically by any news outlet you can find is like, what is the percentage of criminal activity going on this year? What was it last year? How is it declining? What is happening? And so on. And take, for example, last year, everything grew in the crypto space. All the usage was growing 5x. And illegal activity was doubling. So it was growing, but not to the same amount. And now we are talking basis points in terms of like counting criminal activity. So it's just one of these things where anyone who sits in a bank in the room, anyone who's a regulator or anything, it's actually not that bad. It's getting far better, and that's been my number one metric to track. The other one is geos. I said that before. Like, I think understanding what's going on in the world of crypto and really getting an insight is where things are moving is another important piece. And then the last one, that's getting into like the core of more like the nitty-gritty details of what's actually going on, what are the trends, is a bear market coming, is it not, should you be concerned? And that's typically what happens to exchanges and DEXs. What are the whales doing? What are the retail doing? What are the trends? And that's kind of, you could call it exchange inflows and outflows, but it's like, that's another thing that we always track and look at and being like, what is going on right now? Is it just noise or is it real?
For me, Bitcoin, I'm more familiar with Bitcoin, so for Bitcoin, I think MVRV and spent output H-bands and UTXO realized cap H-bands. So these data is all comes from realized price, which is some kind of the entry price for blockchain wallets. So if you calculate when the transaction happens, you calculate the aggregated, the average price when those transactions happens. You look at some kind of entry price for all the blockchain wallets. So for Bitcoin, there's nothing much to do with Bitcoin. If you move Bitcoin, that's highly likely just selling activities. So whenever MVRV goes below 1, which means people are underwater, they're in loss. The market is, in the long term, is like highly likely we're at the bottom. And when this MVRV goes above 3.7, which means all the blockchain wallets P&L is 270%. We're like cyclic top. This is technical though. So for Ethereum and other chains, there are so many use cases. Just moving Ethereum is not selling Ethereum, right? So it's important to see granular level realized price, MVRV. So just extracting all the transactions, going back and forth with centralized exchanges and transaction in decentralized exchanges, and calculate realized price. You will get realized price based on just selling activities. So we're building flexible analytics tools to calculate these type of metrics. So it's going to be launched at the end of this year.
Yeah, I think the thing that makes blockchains very different from traditional finance is that you can actually go down to the most granular level and look at individual transactions. That's quite unique when you compare that to traditional finance. And so in traditional finance, you're forced to look at high-level metrics because it's the best you have. But with blockchains, you can go really deep. So I think I'm not a huge fan of the concept of metrics. I think most metrics are actually quite simple. And the example of smart money, I would use as kind of a suite of metrics or signals that you can think about. So what are the inflows that you see into and out of smart money wallets? That would be one thing I check every single day, effectively, if I look at which tokens they're buying, which ones they're selling. The metric is very simple. It's literally just inflow or outflow into those addresses. But that can often lead to a further investigation into which specific addresses are buying, right? Is this someone who has an activity or a history of holding these tokens, or are they more of a flipper if you think about NFTs and so on? So the first family would be kind of smart money-related signals and metrics. And then the other thing, which Key also mentioned briefly, is around centralized exchanges and liquidity. So looking at the flow of tokens into and out of exchanges. And that's, I think, relevant both for specific cryptocurrencies and tokens like ETH, but even stablecoins too, because you need to understand how much US dollars are basically flowing into exchanges. And at this point, of course, as we know, many people prefer using stablecoins than fiat. So I think looking at the flows of stablecoins into and out of exchanges is a very important one to monitor.
All right. I think that's all the time that we have for today. So thank you very much, Alex, Key, and Michael for this panel. Yeah.
Thanks, Bobby.
Thank you.
Thanks for having us.
Thank you.